fourth and the last financial statement is a statement of cash flows. The statement of cash flows is a statement that shows how much cash the company generated and what they did with that cash during the year. Remember, the statement of cash flows only deals with cash, nothing else. As I mentioned earlier, it measures cash receipts and cash payments, and it categorizes all the cash payments and receipts into three types of activities: operating activities, investing activities, and financing activities. And that is the order that these items appear in the cash flow statement. Operating activities relate to cash receipts and payments from selling goods and services. That's what most businesses are in business to do, sell goods and services. And whatever cash receipts and payments relating to that will be shown in the operating section of the cash flow. Next, it's the investing section of your cash flow statement. This relates to whenever a company buys or sells long-term assets. We all know that long-term assets are things like land, buildings, equipment, furniture. So if a company buys or sells a long-term asset, that will be shown as investing activities in a cash flow statement. Finally, financing relates to issuing stock and borrowing. So financing relates to whatever the company does to raise money. Anything to do with investors, creditors would be shown in the financing section. One thing that I do have to note is that dividends, if you remember, dividends was a repayment of assets back to shareholders. It has to do with shareholders, therefore, dividends would be part of your financing activities. At this point in time, all I need you to know is what the cash flow statement is, what are the sections in the cash flow statement, which is operating, investing, and financing, and then the format, which is what we're going to go through next. This is the format of your cash flow statement. As you can see, the name has gotten cut off from the top, but you would typically have the name up there first, and the statement of cash flow, and the period. Again, this is a period statement, so you would have year ended December 31st, 2012. The cash flow statement is divided into three sections: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Cash flow from operating activities always starts off with net income, so that is your starting point. Next, you're going to see the words adjustments to reconcile net income to net cash provided by operating activities. I'm not going to test you as to what that means. You just need to know that when you see that verbiage, that goes in the cash flows from operating activities section. So whenever you see the term adjustments to reconcile net income to net cash flows provided by operating activities, you're going to put that right under net income in your cash flow from operating activities. In Chapter 12, we're going to learn how to itemize those items and learn what all that means. But for now, you just need to know the format, which means where does it belong. The adjustments could be a positive value. They could give you a positive value or a negative value. If they give you a positive number, put that here as a positive number. If they give it to you as a negative number, put it here as a negative number. So to get at net cash flow from operating activities, you would add 1 and 2. If it's a negative number, you would end up subtracting it. Next, you have your net cash flow from investing activities. Then you have net cash flows from financing activities. And the next item is net cash flows, which is a total. And it's a total of operating activities, investing activities, and financing activities. So you would add those three numbers together. Next, you take your cash balance from December 31st, 2011, which we call our beginning cash balance. Remember, like I mentioned earlier, just as we have a beginning retained earnings, you would look at your last year's ending retained earnings. To find out our beginning cash balance, you would look at our ending cash balance from last year. You would add your net cash flows to that cash balance to come up with your cash balance at the end of the current year. So the cash balance as of the end of current year, which is December 31st, 2012, is how much cash you had in the current year plus what you had in the beginning of the year. You would add those two up, and that would be your total cash at the end of the year. A lot of students find the cash flow statement very difficult to understand. Just remember, in this chapter, all we're doing is looking at the format where it belongs, which is shown right here, what the cash flow statement does, which is record cash receipts and cash payments, and only cash receipts and cash payments, and then identify the three types of activities, which are operating activities, investing activities, and financing activities, and recognize that those three items are listed separately in the cash flow statement.